WM Motor, one of China's most prominent electric vehicle (EV) startups, filed for bankruptcy in October 2023, after failing to overcome financial and operational challenges in the world's largest auto market. The company, which was founded in 2015 by former Geely executive Shen Hui, had raised over $5.3 billion in funding from investors such as Baidu and Tencent, and had launched 4 models under its brand Weltmeister. However, WM Motor could not compete with the likes of Tesla, BYD, NIO, Li Auto and XPeng, which dominated the EV market with their luxury products, smart features and lower prices. WM Motor's bankruptcy highlights the difficulties faced by EV startups in China, where the industry is rapidly evolving and facing regulatory uncertainty, chip shortage, raw material volatility and consumer preferences. WM Motor's ambitions and achievements. WM Motor was one of the first EV startups in China to focus on the mass market segment, aiming to produce affordable and smart EVs for young professionals. The company's first model, the EX5 SUV, was launched in 2018 and sold for around 200,000 yuan, $31,000, which was cheaper than most of its rivals. The EX5 also featured a large touchscreen, voice control, facial recognition and over-the-air software updates. WM Motor claimed that the EX5 was the first EV in China to achieve positive gross margin. WM Motor followed up with 3 more models, the EX6 SUV in 2019, the EX6 Plus SUV in 2020 and the M7 sedan in 2021. The M7 was the company's flagship model and the first to include 3 LiDAR sensors for autonomous driving capabilities. WM Motor also developed its own operating system, called Living Engine OS, which integrated artificial intelligence, big data and cloud computing to provide personalized services and entertainment for drivers and passengers. WM Motor achieved some impressive milestones in its short history. The company delivered over 35,000 vehicles in 2020 and a similar number in 2021, making it one of the top 10 EV makers in China. The company also opened over 200 sales and service outlets across the country, and partnered with Baidu for autonomous driving technology and Alibaba for online sales. WM Motor also planned to list on China's Nasdaq-like star market in 2022, aiming for a valuation of over $10 billion. WM Motor's challenges and failures. Despite its achievements, WM Motor faced many challenges that ultimately led to its downfall. One of the main challenges was the fierce competition in China's EV market, where hundreds of players vied for a share of the growing but saturated demand. WM Motor had to compete not only with Tesla, which had a strong brand appeal and lower prices thanks to its Shanghai factory, but also with local giants such as BYD, which had a diversified product portfolio and a strong supply chain, and NIO, Li Auto and XPeng, which had loyal fan bases and innovative business models such as battery swapping and subscription services. Another challenge was the impact of COVID-19 on the auto industry, which disrupted production, logistics and sales for many automakers. WM Motor was especially hit hard by the pandemic, as it relied heavily on offline channels for distribution and customer service. The company also faced difficulties in securing capital amid the sluggish market conditions and regulatory uncertainty. WM Motor's planned IPO on the STAR market was delayed due to stricter listing requirements and scrutiny from authorities. The company also failed to complete a reverse takeover deal with Apollo Future Mobility Group, a Hong Kong-listed company that backed out of the $2 billion acquisition in September 2023. A month later, WM Motor announced that it had signed a non-binding letter of intent to be acquired by Kaisen Auto Holdings, a US-listed Chinese used car dealer, but the status of that deal was unclear at the time of its bankruptcy filing. A third challenge was the rising cost of raw materials and components for EV production, especially semiconductors. The global chip shortage affected many automakers around the world, forcing them to cut production or raise prices. WM Motor was no exception, as it struggled to source enough chips for its vehicles and had to increase its prices several times in 2021. The company also faced pressure from customers who complained about quality issues, service delays and software glitches with its vehicles. As a result of these challenges, WM Motors sales plummeted in 2021. The company sold only 1,387 vehicles in the first 8 months of the year, down from over 20,000 in the same period of 2020. The company also accumulated huge losses over the years. According to its stock prospectus released in June 2022 for its planned Hong Kong IPO, WM Motor lost $1.13 billion in the 3 years ending in 2021. The company also had a debt of over $2 billion as of June 2021, according to its bankruptcy filing. WM Motors outlook and lessons. WM Motors bankruptcy was a shock to many observers and investors, who had high hopes for the company and its founder Shen Hui, who once said that WM Motor could be valued higher than Tesla. The company said that it would restructure its business and seek strategic investors from around the world to achieve its rebirth, but the prospects of that happening are slim. WM Motors bankruptcy also serves as a warning to other EV startups in China, which may face similar challenges and risks in the future. Some of the lessons that can be learned from WM Motors' outcome are: the mass market segment for EVs in China is not as lucrative or easy as it seems. While there is a large potential customer base for affordable and smart EVs, there is also intense competition from both established and emerging players, who can offer better products, services, and prices. EV startups need to differentiate themselves from their rivals by focusing on niche segments, creating loyal communities, or providing value-added features or benefits. The EV industry in China is highly dynamic and uncertain, and requires constant adaptation and innovation. EV startups need to be prepared for changing market conditions, consumer preferences and regulatory policies, and be able to respond quickly and flexibly. They also need to secure sufficient and stable funding sources, as well as reliable and diversified supply chains, to sustain their operations and growth. The EV industry in China is not only about technology, but also about quality, service and customer satisfaction. EV startups need to ensure that their vehicles are reliable, safe and user-friendly, and that they can provide timely and convenient after-sales support and maintenance. They also need to listen to customer feedback and complaints, and improve their products and services accordingly.